Are you trying to figure out if now is a good time to invest in real estate? If that's the question you're asking, you are going to want to listen up to today's show. We are going to be diving deep into the State of the Union here in spring of 2024.
Hi, accredited investors. Hey, I'm so excited. We got a new deal right now. It's a 46 unit building, brick, solid brick, in the race horse capital of the world, Lexington, Kentucky. Rents on this thing, they're 15% below what the market rate is around it. I know because we own several buildings in the area. We're buying this one 15% less. To learn more, all you have to do is go to homeinvest.com or click on the description down below. Inside the description, you'll see a link down there. Remember, always consult with a tax advisor, a financial planner, or attorney before making any investment decisions. Having said all that, all you have to do is go to homeinvest.com or click on the link that you'll find down in the description down below. Thanks, God bless. Enjoy the show.
If you're new to the show, this is Purpose-Driven Passive Profits. I'm joined by Nate Armstrong, the founder and CEO of Home Invest. More than 20 years investing in real estate. My name is Steve Warner. I am the Chief Revenue Officer, and we are here to help you guys be great stewards of what God has given you, following the principles talked about in Matthew 25. All right, Nate, let's jump into it. What is going on right now? What's happening in real estate that people need to be paying attention to?
Lots of stuff. So pay attention right now to the Federal Reserve. Remember earlier this year, they came out saying, hey, we're doing our job. We're killing inflation. We're going to cut rates 3 times this year. Well, let me ask yourself this. Have you seen any rate cuts? Have you seen the Federal Reserve pivot? Have you seen them backtrack on anything that they've said? And if you haven't been watching, I'll just tell you, yes, they have. They backtracked all of it. They said, oh my goodness, things are not quite under control. We're not going to be able to do 3 rate cuts. We're going to have to adjust that. So just watch what's happening there, because the Federal Reserve rates, they affect interest rates across the board, and it majorly affects real estate. It's the biggest lever that real estate has. It's the interest rate.
Well, let's take that. So the interest rate is staying up. There's an article and some research showing recent home buyers, people that have bought in the last 8 to 12 months, regret buying. The majority of them, a lot of them have actually had a hard time making their payments. They've had to take on additional debt. I know Nate, you and I watch car repos. We watch credit card debt. We've seen credit card debt skyrocket. We've seen savings amounts plummet. We have seen late pay and non-pay go up. All of those things right there. I mean, it's showing that the market is getting worse and worse. What does this mean for people that are looking to invest in real estate? I know a lot of investors have been sitting with cash on the sidelines. Are we finally hitting that place where people should be buying?
Yeah, great question, Steve. So that article you're talking about, it's in Housing Wire right now. And the Housing Wire article says that basically there's an overwhelming majority of people that they surveyed are having concerns with owning their property right now. A big percentage of them say that they just can't afford it. They're struggling to make the payment. They can't make the payment in a lot of cases. So is it a good time to jump into real estate investing? Well, I'll tell you, it depends on what asset class you're going after. If you're going after single family homes, it's getting close, but we're not quite there yet. It's getting close. Where it is right now is in the multifamily game and the office game. If you are a multifamily investor, you are in heaven right now. This is that article that I mentioned, in case you're able to follow along on video. If not on audio, I'm going to explain it for everybody. Over in multifamily real estate, we've seen 2 dips in 20 years for multifamily house pricing or multifamily building prices. One of the dips was 2009, and the other dip is right now. The 2009 dip did not last very long. Single family houses back in 2009, they stayed down for a while. They were down for many years, 3-4 years. Multifamily was not. Multifamily was down for 9 to 12 months, depending on the zip code that we're talking about. Very resilient asset class. And so although we're down right now on multifamily prices, we don't expect it to stay down. So back to your real question, is it a good time to invest in real estate? Absolutely, as long as you're in the right asset class. If you want to play with single family houses, I would say you're probably mistimed by a little bit. You got to wait a little bit longer.
Okay, so wait just a little bit if you're going for single family. If you're looking for multifamily, now is a great time. Nate, let's talk about what about people that want to invest passively? So we've seen the multifamily passive market. I mean, there's been some huge people handing keys back to the bank. There's an article right now where a building in Tampa, people always think Florida is the hottest market. There's a building in Tampa that just sold for 30% loss. This is showing you that the times are a changing. What should people be doing if they're looking for passive real estate investments right now?
Yeah, partner with the right partner who's going to run the project. So, like when you're passively investing in real estate, I'm just going to be blunt. There's no such thing as a passive real estate investment. This doesn't exist. I know that it's this fantasy world where everybody thinks, oh, I'm just going to hire a property manager and sit back on the beach and collect rent forever. That doesn't exist. There's still someone that needs to be involved above the property manager that has to make the critical smart calls. Do we do a new roof? Do we prepare for this insurance season by getting rate quotes in advance? Do we do distributions or do we hold the money in reserves? All those questions have to be made by someone who's really involved intimately with the process of managing buildings. It's not the property manager. Property manager is not that person. So if you are a passive investor, I would recommend you find a really good operations partner. You find the person that's financially tied to the success of the deal. And remember that part. They're financially tied to the success of the deal, and then you find a way to partner with them. That's how you can truly be a passive person investing in real estate.
Okay, so you're coming into a syndication. I know we've talked about this in past podcasts, but what are the three big things that you want to look for when you're looking at a syndicator? I know the question when people ask me that, I always say you want to be looking that they went through the last downturn. You want to look for long-term fixed debt, which in multifamily is starts at like the 7 year mark, 7 to 10 years. And you want to make sure that they have a great track record. Is there anything that you would tell people to look for if they're looking at syndicators as well?
You nailed it. I'll just expand on one of your points because I think the other two you covered really well. One of the points on have they survived the downturn? Like literally, have they sold properties when the economy got tough, when expenses went up, when the interest rates went up last time? And believe me, this is not the first time in history interest rates have gone up. This is a cyclical thing. When that happened last time, did the operator survive? Did they sell properties? Were they managing? Were they in the game? Or did they just enter the game during the good times? Because when expenses get high and the economy as a whole, when tenants get sensitive to absorbing expenses, you have to be a more efficient operator. We've seen insurance rates triple in the last 18 months. Triple. I guarantee you, people that bought 18 months ago, they weren't expecting that. And therefore, all of a sudden, their underwriting no longer matches reality. And they didn't expect labor costs to go up. They didn't expect general costs to go up across the board or debt costs. So you want to work with someone that's actually been through multiple cycles. If you get someone that's a pro, a veteran, and they know what to do before the storm even arrives, then you're probably in a much better position to make it through the middle of any kind of storm.
That's that's a very good safety mechanism to ask. The other question that you can ask is what kind of occupancy rate do you hold in your current properties? How are you managing move outs and tenant move ins? What are you doing now that the economy has gotten a little bit tighter? Do you have a wait list on your current properties? These are all questions that will let you know whether the person is a really good operator. So, those are the things that you want to look for in multifamily. Going back to what is going on in general, the state of the union. The last big piece here, Biden again giving out $30 billion. Nate, do you just want to touch on this one really quick? Not to get
Yeah.
everybody's blood pressure up, but what does this actually mean for people?
I really wish that before Biden could stroke a pen or any public official, it's not just Biden, they all do this, they're all guilty. But before they can stroke a pen handing out our tax dollars, I wish it would be something that we were able to take a vote on because I just wouldn't vote for all these handouts. I wouldn't vote for our money being sent overseas somewhere else. We got enough of our own challenges here at home. Our youth need help, our border needs help. There's so much things that needs help. But I digress. Yes, the Biden administration just signed another bill. I don't know if it's a bill or whatever it is, but they signed something. It's called HUD number 24-112. And it's another $30 billion that they get to hand out to people that are in a position where they feel like they can't make their mortgage payments. They can't afford to make all the payments. So this is an effort. You know what? I'll just let everyone decide. Here's the question I'll leave you with. Do you think, and this is the third piece that he's signed in the last few months, all this year, all on an election year, do you think that any of these handouts have anything to do with the election? I'm not going to put my spin on it, but I'll just ask the question and you can think about that. So that's what's happening right now. That's why you see possibility of less foreclosures than normal, less people losing their house than normal, because there's a lot of money being handed out right now by the Biden administration to prevent foreclosures.
All right. We will end it on that. If you guys are looking for a great real estate investment, you can click the link in the description. Nate and I always have amazing multifamilies and a machine shop fund. That is our current offering. We always are here to provide great investment opportunities and help you live out Matthew 25. Until next time, guys, be great stewards, and we will see you here on Purpose Driven Passive Profits.